Hello, everybody, and a very warm welcome to MTD Watch, your real world guide to making tax digital, powered by the Ask the Accountant Network. This is a show where we cut through the noise and dive into MTD really means for your practice, from pricing and preparation to the tools helping firms get ahead. I'm your host, Aaron Patrick, aka the QuickBook Chap, and joining me today are two of the sharpest minds in MTD strategy, plus a special guest. But we'll go through our two normal co-hosts first. Amy, co-host of the QuickBooks Lab podcast and hashtag audit. Amy, how are you doing?
I'm good today. Hi, everyone. Hope you're all well. Hope you're enjoying the, sunny weather where I am. Pretty warm weather where I am. Thank God for air conditioning.
Oh, I would die for some air conditioning at this point in time, but more on that in a moment. Suzannah, that's important to say the M bit first. ICB bookkeeper and MTD specialist. How are you doing?
I'm okay, thank you. Jealous of Amy's aircon. It's baking in here. I've had to shut the window because next door's kids are having a trampoline and paddling pool party with all their friends, and they're having a lovely time, but it's quite noisy.
And if you use the referral link in Amy's bio, you can get yourself your own air conditioning service
for your aircon.
If you don't have one, do get one.
Do not just do it through
share the link later.
Get it through our queue. And then, as always, we have some very special guests on Ask the Accountant, but it doesn't get much more special when you're actually in his office in Guernsey. Tim, how are you? And why are you here?
I mean, I'm probably better than you right now, considering your antics for the last 2 days. But we'll come to that later.
Yeah,
it's a lovely sunny day in Guernsey behind the layer of thick cloud that's currently covering the island. But it is still boiling hot. Imagine a really lovely hot summer's day, but without any actual brightness, and that's pretty much today's weather. We're up in the attic, in the broom cupboard, in the storage room at the top of. I always hate it when people call something like something towers. So I don't want to say TCS Towers, but it really kind of is. We're 8 floors up. We've got a lovely view behind me that you can't see. And we made Aaron walk up all of those stairs despite him temporarily carrying a sporting injury.
Yeah. At this point, basically, in my defense, what happened was I came to Guernsey and Tim pushed me down a mountain. That's my story, and I'm sticking to it.
What actually happened is that Aaron was attacked by a completely flat piece of land.
The flattest of flat.
But we will all see the footage soon, right?
It's producer Lizzie can't wait to get that.
She's sitting on the floor next to us, editing it now. But the real answer to your question, why I'm here, is to give a bit of an outsider's view on MTD and the fact that everyone's making such a fuss over it. And kind of what I think about it from a remote point of view, good and bad. So it's always interesting, I hope, to get an outsider's point of view, and hopefully I'll say at least one thing that you agree with. And if not, then you can attack me in the comments and we'll be ready to defend it.
I cannot wait for this. I cannot wait. Let's go through the other AI created randomness that we've got to say at the beginning. In this series, we'll unpack the true cost of MTD readiness, exposing the common pitfalls and grilling the software vendors on what's working, and even dive into what isn't. We're broadcasting live across LinkedIn, YouTube, and Instagram. Well, actually, the Instagram didn't work, so sorry, Instagram followers. And this episode will be available on demand on all major platform podcasts. Be sure to follow and subscribe so you don't miss a moment of our new series. And if you're watching live, drop your questions and curveballs into the chat. Just like we got Mahu there as well. Good afternoon, everyone, from a cloudy London today. It's cloudy here in Guernsey as well. That's the first time I've ever been able to say that. I wasn't promised cloudy. I was promised. I was told, don't bring a coat, don't bring trousers. Think of it like every other summer holiday you've ever been on was what I was told to pack, and I packed accordingly. And Kirsty says hello. Kirsty, how's it going in March? Give us some.
No, it's August.
I love how that's normally my joke, and even I caught out by it. Brilliant. All right, everybody, let's get into the main show and dive straight into it. First of all, let's see if you've got any feedback from the last show. Now, remember, if you've got feedback, we've got a nice little link that you can go into. Give us the feedback. We've got some great questions, and we'll cover them in the end of the show today. But if you do have feedback from the last show, send it over to us. We want to be kept honest. We want to be kept going forward. But we had our own internal feedback, didn't we, Suzannah? We looked back at what was said, and we feel like there was a bit of a confusion there, or a little bit of controversy, and we just wanted to set the record straight. What was it about, Suzannah? Go for it.
It was when we were talking about cash basis, and we were saying that was MTD going to be on cash basis.
Yeah.
And I had a look. I looked it up because I didn't think it was particularly, but it made me question it. And the answer is that cash basis obviously is now the default for sole trader and landlord income, up to with certain exceptions, which I think are to do with thresholds and stuff like that. But they're very clear that you can use either cash basis or accruals. It's up to you, and it's the same for MTD. You just have to be consistent throughout.
I mean, Amy, what do you think to that? Because me personally, I hear that and I go, wouldn't it have been simpler just to make a cash basis and just? I get choice, but at the same time, I sit there going, that's just going to end in tears at some point, right?
I mean, it's just another thing that we have to explain to people. I mean, we're doing it for tax returns anyway. Most of my clients are on a cash basis. They've always been like, and when it came in that cash was going to be the default, it didn't really affect my clients massively. I just assumed it was going to go on the same trajectory as what we were doing on the tax return. So cash basis for me is fine, especially for the landlords. It just makes life easier. Whether the software is going to give you that choice, like I'm not sure. I hope the software will default in line with what MTD is going to default. We'll be having a look when we go through all of the softwares. But
I think it will default to whatever basis you're set up on the software. That's my understanding.
But even reporting it, because I know you can set up and you can choose a report, cash or accrual, especially in the software I use all the time. But when you're sending that over, do you get the choice? Would you expect to get the choice? Isn't that just going to be confusing? Like,
I just think it will default to whatever your basis is in that software. I would have expected it to, in the same way that it would do. I don't know if your VAT. Well, I suppose that's different because you've elected for cash basis VAT, but I would have thought it would default. I mean, it does if you're filing a tax return.
Yeah. The concern is the clients that are then wanting to do it themselves. So I've got the example I always use with subcontractors as an example. I've just been doing their tax returns. They give me everything at the end of the year, quite often paper format, although I'm getting them to scan it. If they turn around to me and say, cool, I've got to use software, I can do it myself. It'll be fine. They're setting it up themselves. What does this mean? Hopefully it will just go cash and then the drop down would be accrual, because a lot of them, no offense, but a lot of them aren't going to know what that word means.
That's it.
No,
so they might go cash.
I don't think my sole traders know whether they're on cash or accrual generally, and they don't ask and they don't question it, and I choose the method that I think will suit their business best, or if they're over the threshold, they have to go on accrual.
Yeah.
Because it's questions like that just put people off even trying to do it themselves, right? They'll get to that question, they'll ask ChatGPT or John down the pub, and they can't get the answer. That's it. They panic.
Yeah.
And that's where it spirals into problems, right? And I just feel like MTD needs to be as simple as possible, like straight.
I think that's why they're defaulting it. I think that's why they brought that default into cash basis for people who do it themselves. That does make sense, because I think that's how most people sort of intuitively think it works. They think it works on cash that they've received. But so I think that's why they brought it in.
Yeah, and then like Amy said, from a CIS point of view, they're cash basis anyway, right? Which a lot of this MTD is going to be CIS pushing, isn't it? So, Tim, any opinions, cash versus accrual, or do you just not care?
No, I it's not that I don't care. I just think this is going to be a recurring theme for the rest of this podcast, is that I think that a lot of people are making a massive fuss about nothing, right? They've decided that it's going to be default cash basis and you can choose accruals basis. Great. That's the end of the story as far as I'm concerned. The concern there is all the software going to be set up in such a way? Because I know that I may be slightly incorrect about this, but I think it's in Zero. there's certain reports where even if you're accounting on an accruals basis, it automatically runs on a cash basis and you have to select, no, I want this report accruals basis. In Xero's defense, I think it's the older reports that they're retiring.
Not the modern ones. Yeah.
Maybe.
We just need to make sure that, you know, if that's the case, you just need to make sure that the software is all the software vendors need to make sure that it's intuitive and it's obvious, because what you don't want to do, obviously, is accidentally file an accruals basis return when you should be filing a cash basis return. But that, for me, is the only concern. As long as you can make sure that you're not accidentally filing the wrong thing, then who cares that they've made cash basis the default? If all your clients are accruals basis, the first thing that you do is switch them over as soon as you set them up, right? So that's just a simplification. And I think that that's one of many things where, because we've all had far too long to think about this, we're overthinking it.
But isn't it the fact that HMRC are even given the choice? Like,
this is all HMRC's fault.
Yeah.
And in my head, they shouldn't give you the choice, right? It should be a case of how is your organization or sole trader in this case required to file its tax return, right? Is it on a cash basis or an accruals basis? What is the requirement? That's how this should be done. And there shouldn't be these options.
Agreed. Well, let's move straight on to our main topic then. So our main topic today. And remember, if you've got feedback, use the feedback form, get them into us, or tell us in the comments now, and we'll cover that feedback as we go along, as you point out where we may have gone right or wrong, and very good at doing that for us, which we love. So the main topic is very much a case of an outsider looking in. So we have Tim here, who, as you can already tell, has a few opinions that we want to dive into and understand a little bit more. But from your point of view, Tim, if we start from the top, would you see MTD as a positive or negative if it was going to affect your clients? And I think also good to explain why at the moment it doesn't really affect most of your clients.
Yes. So the reason it doesn't affect most of our clients is that almost all of our clients are Guernsey based. We have no Making Tax Digital coming in Guernsey and no plans to do so at the moment. It also, in its current setup, even if they were mirroring it here, wouldn't affect us, because most of our clients are limited companies, even the quite small ones, which I can talk a bit more about, you know, reasons behind that. And it isn't just tax. Just before everyone goes, oh my God, a tax haven, it's because they pay 0%. Yeah, they do at the moment, but that's not the main reason. I think that, so for me, it's interesting because it's not immediately going to affect me. And you can almost think of this as like, let's say you were setting up a new practice in 5 years' time, right? MTD would already be in, it would be embedded. And my point of view is more, you know, what are HMRC doing wrong? And they'll obviously listen to this and take notes and make enormous changes based on the feedback of people from Guernsey, as you know. But it's more, I've been listening to these podcasts. I've been listening to other podcasts about MTD. Everyone's been talking about it for 3-4 years. It seems like an eternity now. We've seen a lot of Chris Downing content on MTD, which is fantastic, and it's all getting out there. But my point of view is more, okay, who's overthinking it? Who's making a fuss about nothing? Who's not making a fuss about something that's actually going to be a huge problem? And like, there are wider implications than this. The main issue I see is how, and none of you will be surprised at this, it's how HMRC are implementing this. If you think back to when RTI came in, right? When RTI came in, HMRC basically went, from this date, if you have employees, you will need to submit RTI returns, right? It wasn't quite that simple. There was a little bit of phasing, but there was none of this. It wasn't like, oh, if you're paying out less than £1,000 a week in payroll, you won't have to do it until 2029, right? It was done very quickly. It was done very smoothly. And people also didn't use it as an excuse to try and sell you new software, because you needed to have payroll software. But even if you were using on-premise, desktop-based, server-based accounting at the time, they built the RTI returns into it. And let's not be funny, they only called it RTI because they hadn't thought of the acronym MTD yet. Right? What it really is MTD for payroll.
Yeah.
So we've had, actually, this isn't the third MTD, this is the second MTD, this is the third. We've had MTD for payroll, MTD for that, and now we've got MTD for income tax. So now this is the third go. It should be way slicker than this. It should be way smoother.
Yeah, but as we can tell.
But it's worse.
Yeah.
It's worse, that's the thing.
So if they were to implement it in Guernsey, how do you think your client base would? I know you're saying a lot of them aren't, but imagine for whatever reason in Guernsey they said, right, they're going to have the corporate, the Guernsey corporates are going to be the ones that have implemented. How do you feel like that would disrupt your client base?
So for our client base specifically, it would cause almost no issues at all, because almost everyone is on weekly or daily bookkeeping, and the very minimum is monthly. Even clients where we call them a year-end only client, generally we're still getting all of their records monthly. Okay, so we're getting everything up to date at the end of each month. There are obviously the odd exception here and there, but the vast majority for our client base, they wouldn't even notice. Right. And we wouldn't even notice because the work is already done.
Yeah.
The only thing that would be different is things where for some clients, there are things that we just run at year end, like their whole depreciation, charging and everything. We might have to actually do that monthly, but that's not difficult.
You don't need to even do that quarterly. That isn't included in the quarterly filing. So it sounds like it wouldn't really change at all.
Even if it was, that's not a load of extra work. And there's there's solutions around to help you with that. We met one today. And so for our client base, no, really not much of an issue at all. There are still, however, I know a lot of businesses in Guernsey and a lot of sole traders. And don't forget, we've got a really high ratio of self-employed people in Guernsey. Something like, I can't remember the statistics exactly, but something like 1 in 6 people in Guernsey work for an organization with fewer than 10 employees.
Wow.
So there's a lot of sole traders and sole limited companies and a lot of self-employed people. And the issue for some of them might be, they're going to have to pick up their socks a little bit, and they're not going to be able to just submit a shoebox at the end of the year.
Yeah.
But this is the one thing that I don't get. This is the stop whinging time. This is stop complaining about it. Oh, boo-hoo, I don't want to do my accounting monthly. Tough. Right? When payroll moved to RTI, you can no longer submit your payroll records on paper, right? It wasn't like, oh, boo-hoo, I don't want to do it. Please come up with an alternative scheme for me. And everyone worried about it. What did we all tell our clients back then? Well, I didn't have clients back then, but I was involved in, I was like, secondary to it. It was like, well, unfortunately, that's what you have to do now. So, right?
Yeah.
You didn't have the option. You can't just decide that you're going to file your VAT return once every 4 years. You have to do it quarterly. You can't just decide that you're gonna, pay your council tax sometimes and not other times. You just have to do it.
Yeah.
So why we've got into this is like this might be a little bit philosophical, right? But we've got into this attitude with government and with the tax agency and everything, where we now expect to be consulted with, and we expect to have all these different options and all these different ways of doing things. And sometimes they have to say, just do it. And I'll give you a prime example of this. I know that things that we do in Guernsey can't necessarily apply exactly the same in the UK because of the wider tax base, right? But it can be used as partially an inspiration. In Guernsey, from the beginning of the 2023 tax year, they introduced individual assessment, right? Some may say that should have been done about 25 years ago, because what I mean by individual assessment is that if you are married up until 2023 tax year, the default was that you were jointly assessed. So if you were either the wife, and it was set out like this, the wife or the younger partner in a same-sex marriage, right? You did not have your own tax reference number. You were on your husband or older partner's tax reference. And that was the default. And during 2022, at some point, they said, you know what, from the 2023 tax year, you're going to be individually assessed. You'll get a new tax reference in the post about a month before. End of story. And it didn't matter how much people complained or how much people said, oh, no, but maybe I'd like to be jointly assessed. And they just decided they were doing it, and they did it, right, for better or worse.
Yeah.
And sometimes I feel like HMRC needs to take more of that stance.
And just do it.
And just do it. They need to just say, we're doing it, shut up. Then they need to actually keep up their end of the bargain and make it work, right?
Yeah. But I think it's because if you think about RTI, or in your wonderfully assessed one, MTD round 1, there was benefits from day one, right? And I feel like a lot of people saw the benefits. It was making sure that people's tax codes were updated on a more regular basis, so hopefully they get under or over taxed, right? It was making sure people were getting their collections done on time, so if they did have collections and you made it, that's what RTI brought to the table, wasn't it? It was a much more of a real, well, says it on the tin, right? Real-time information so that payroll could be a lot more accurate. I wonder if the problem that HMRC keep doing with MTDs, they've never really sold the benefit, have they? I've not seen a single bit from anywhere. But that's down to us, isn't it? We've been kind of got the burden of let's tell our clients the benefit of this wonderful new MTD threshold. And don't be worried about it. Here's your benefits to go through. Maybe
they talk about closing the tax gap, don't they? And they talk about it being more everyone's returns being more accurate, but they're not selling the benefit to the
and is that aimed at the individual though?
No, that's what I mean. It's not aimed at the individual. It's as the country, which is fair enough. But I think people only see it from their own personal point of view, don't they?
Yeah.
So,
and did I misremember that RTI? That's what they pushed, wasn't it? It was very much this is a benefit for everyone. Make sure your employers like they were talking to employees, weren't they? Like, make sure your employers up to date with this because this is going to benefit you by having automated tax codes and stuff like that. Pretty sure that's how it was, right?
Yeah, and I think it helped people for like tax credits and benefits and stuff if they were on low income. And I guess as well, it was keeping employers more accountable to paying at least the national minimum wage and stuff like that. I think, things like that would be spotted more quickly. So, there was more of an individual benefit.
I remember reading somewhere, or it might have been listening to someone on stage saying, I think that exact question was asked and it was, people want to know what their tax liability is. That's the kind of angle that I'm going with some. It's still a little bit wishy-washy. It's more of a case of you have to do this. Completely agree with Tim, what he was saying. Just bring everyone in. I've got a situation. I've got a father and son, both in the construction industry, both work for the same company. Father's over, son isn't. Neither of them have got business bank accounts. Neither of them have got any form of bookkeeping. And they're CIS, so they don't even have any liability. So, and they're the ones that I'm really struggling with to be like, come on, let's get a business bank account. Let's just start with that point. But we have been kind of been left to our own devices to go, this is the benefit. You know what your tax is going to be when you pay it the following year.
We're allowing, in some ways, like the government and HMRC are allowing too much leeway, right?
Yeah.
It should be a legal requirement to have a separate business bank account. Why do we not enforce that, right? Other countries do. Okay? You cannot, in many, many European countries, and I'm sure other countries around the world as well, if you run a business, even as a sole trader, you are required to have a separate bank account. It's a legal requirement. You can receive a massive fine if you don't. Why is that not in place, right? It's all this historic stuff where we, in the UK and by extension in the Channel Islands quite a lot of the time, we just say, ideally we'd like everyone to do this, but it doesn't really matter if you don't want to. Like, just make it the rule, okay? We've still got one of the most lax tax codes, one of the most complex and at the same time lax tax codes in the whole entire world, because there's loophole after loophole that you can just get around stuff. And even with the thresholds, you've talked before on this podcast, and other people have discussed as well, that we know, like, because we all have clients like this, they're going to purposefully limit their income to avoid having to do it, which is completely counterintuitive. It's like people who go, I'm not going to sell this guy this, 300 quid thing because it's going to take me over the VAT threshold, so I want to stay below it. It's like, right, cool, but you've just cost yourself the rest of the year's sales, right? So, why don't you actually look at, okay, if you did register for VAT, you're going to have to charge VAT, but you're also going to be able to reclaim VAT, right? And then you're not limiting your own growth, right? Thresholds for things like VAT, there's two arguments, right? One actually says the threshold should be like 1,000 quid.
Yeah.
Right. So that everyone's registered and everyone's doing it and no one's falsely limiting their income. And the only reason you have that £1,000 threshold is the absolute micro traders. Right. Same as with self-assessment. The other argument, which is what they do over in Jersey, is that the thresholds should be much, much higher. And that you say I think the threshold in Jersey for GST is 350,000. Wow. Because then similarly, the vast majority of businesses, SMEs at least, they're not going to hit that threshold anyway, so they don't care and they don't falsely limit it, but they tend to voluntarily register, right?
Yeah.
So in my opinion, the low threshold is probably better. And that's what it should be with MTD. It should be, if you're required to deliver a self-assessment return, you should be required to be on MTD.
Yeah, 100%.
I think the staggering of the thresholds is helpful, though, in terms of us being able to manage it. If everyone was being brought in all at once, it's just extra pressure on us as the bookkeepers and accountants to try and implement it.
Absolutely
but I agree with what you're saying. I do think, I think eventually the
decision was earlier,
come down to maybe the personal allowance.
If the decision was earlier to just have everyone in, though, we would have had time. We would have started. So say when they deferred last time and they went, do you know what? We're just going to make it easier. Let's just do everyone in 2026. We would 3 years. We would have had.
Quarterly filing for somebody with a side hustle of a couple of thousand a year would be maybe an excessive burden, perhaps.
But surely they've got to be in there at some point, right? Like, we can't have this threshold that's just lingering forever, surely. Like, we don't know, because HMRC won't give us a definitive answer, but they've got to bring that minimum threshold down at some point, right?
Would it be a huge burden?
I think it will get brought down,
But would it be a huge burden if someone's turning over £2,000 a year as a sole trader? Is it a huge burden? Because you all know what's going to happen. There's going to be there'll be a specialist, right? There'll be like one of us somewhere that's picked up a load of clients off of TikTok and YouTube and that, who is the absolute specialist at dealing with those tiny little clients. And you're probably not doing the work for them. You're probably training them.
Yeah.
You're probably saying, right, brilliant. You're selling £2,000 a year's worth of stuff on Etsy. It's 100 transactions. I've got this amazing bit of free bookkeeping software. Maybe it's Free Agent, right? That you get with your bank account, and you're going to have to use this, and this is what you're going to do. And all I need you to do is tick, 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 right? If you want me to review it, then you're gonna pay me.
Yeah.
Right. And there'll be someone doing it.
Absolutely. I mean, I'm playing devil's advocate.
This is exactly what I'm doing.
I can tell that that's what people say.
Yeah. I'm saying to every person that comes to me, side hustle, self-employed, whatever, now, go and get yourself a business bank account, link it straight away, even though I don't know when they're going to come in. Just everyone that's starting now that's coming to me, start from that, because I'm anticipating it.
But that's people who are coming to you. I'm talking about the people who potentially just file their own, really tiny little businesses, and they would have no need for a bookkeeper or an accountant otherwise. They're going to feel like they're being forced into it, potentially, and forced into having software if their turnover is that tiny. I mean, if they're not even paying tax on that turnover, then they could. I think
it's probably sorry.
I mean, I agree with what you're saying. I'm playing devil's advocate because I know that will be what people will say. That will be their argument.
I think what Tim is saying, and I agree with Tim, is the sense of if you don't know any different, like it should be I'm doing a side hustle. I'm employed. I'm doing a side hustle. I have responsibilities. A part of that is to separate it and do that. If that became the norm, no one's going to complain about it, because
it's that transition, though, isn't it, into that? Yeah.
And it's the message you want to go and do side hustle. When they started saying about Etsy and eBay going, it was all so negative.
I know.
It could have been well done, you've got a side hustle, you're doing well. Yeah, you're gonna have to report it and do a little tax, but congratulations. And it's always such a negative.
But that's the media, and also HMRC are not putting the message out. And when it has to come, the media are always going to put like a kind of clickbaity spin on it. And then when the message is coming from us, I think people are cynical that we're trying to make money out of it. So again, it would help if HMRC would put out sort of a proper information campaigns so that people actually knew and understood.
Well, what they actually need to do is they need to say that there's, if you're trading, there's a requirement for you to file certain things at certain times. You can either pay someone else to do it, or you can become competent to do it in this way, but you maybe need to prove your competency. Again, in some other countries, many other countries actually, you can't file your own tax return without proving that you're competent to do so, right? And I'm not necessarily, I've discussed this with people on LinkedIn before, and like we're all pretty much of the agreement that no one should be forced to engage an accountant or bookkeeper. That's not cool. Like that's we don't want to force anyone into that. despite the fact that it might benefit a lot of us. But what we need to do, you know, we don't let people drive a car unless they're competent to do so, right? So you can either get a taxi or you can learn to drive and get a driving license. But what you can't do is just, oh, I've just decided to drive a car. So why do we let people just decide to file their own tax return, right? And I'm not asking for anything onerous. I'm saying, you know, maybe it's like doing the basic QuickBooks certification, for example, right? Anyone that is capable of setting up a business, a sole trading activity, is capable of learning those basic skills, and it can be cash basis. Here's your money in, here's your money out. Every quarter you need to complete this filing.
100%.
But you have to make it just not scary for them. Right. And it can't be backed up with, you know, you're going to have to do this or you're going to be fined. It needs that positive reinforcement as well. And you can give negative and positive at the time. But what are the positives of this? It's making sure you pay the right amount of tax. It's making sure you're not getting enormous demands for like payments on account for a year when you know you're actually having a really bad year and you're going to make a loss.
And like you said, it's almost like congratulating them for starting their side hustle, and you know, this is part of it, isn't it? Let's make sure we don't miss out on our wonderful community. So Kirsty tells us it's bright, but agreed no actual sun in March. And Penelope, you almost killed me today, as we tried to emulate her podcast horribly wrong. As someone that started bookkeeping before Sage Desktop had even been invented, I agree with Tim. This is a huge storm in a teacup. We were ready years ago with all clients on cloud software since 2014, with a minimum of monthly bookkeeping. So completely agree there, Penelope. And it's, you know, it's one of those things, isn't it? For some of us, we're looking at MTD and going, well, what is the big problem? We're already on software. We're already, it's one extra click for us a quarter, you know, if that. But it is the case that not everyone's in that position, are they? Not everyone's got
people who are doing it on their own, who are doing their own, who are frightened, and then possibly
isn't it?
Maybe some sort of older, more old-fashioned sort of accountants who aren't really using software that much, and they're not ready, you know, perhaps. But I think the majority of us, it isn't. I agree, it's not that big a deal.
Definitely. Tim, another question for you. You've got aspirations. You're looking to get yourself, you know, grow your practice and everything else. You're not just looking at the Guernsey population and going, well, I can assist all these wonderful clients you have on this island. You're thinking about potentially coming to UK, or have some UK clients at this point in time. Does MTD put you off, or does MTD spur you on?
No, I'm not put off by it at all. Although if we were going to do it, I'd like it to be managed better. I would love to see something similar in Guernsey. For those that don't know, in Guernsey, pretty much everybody does a tax return at the end of the year. We do have a scheme similar to PAYE called ETI, which is electronic tax installments, but it's not cumulative. So it's based on what you actually got paid that week or month. So it can often lead to either a refund or a liability at the end of the year. And for companies, we just file a tax return, you know, after the year end once a year, and that's it. I would love to see some more, you know, quarterly. We've recently had we file quarterly for payroll. So for ETI and Social Security, there's a quarterly return. They've just launched mandatory secondary pensions within the last year. We now have a further quarterly return to do for that. So as long as the quarters were maybe different, so we're not loading all this work.
Am I right in thinking you don't have VAT or anything over there, do you?
No, at the moment we don't have any sales tax. The states did vote last term to introduce GST, but then we had a general election, and it's, you know, that's all a bit up in the air. They're going to debate it again, and so who knows? But there's a misconception. We aren't lacking corporation tax. It's just that the corporation tax prevailing rate currently is 0%, but we still have to produce a full set of accounts and tax returns for every company, as we would have to do if it was 5% or 20% or whatever. And there are companies who have multiple tax rates because of the type of activity that they undertake. So it's not, oh, aren't you lucky you don't have to do tax returns? We still have to do them. It's just that the liability at the end is always zero. We do have income tax, and that's the ETI returns every quarter, and the Social Security, which is similar to national insurance. And we also have some other, like some economic activity returns and things like that, but I won't go into that because it's not tax related. I'd love to see it a bit more digital, because when we input client tax returns. We log in through an accountant portal, but we then get the exact same screen as the client would get if they were doing it themselves. So we have to manually then answer all the questions, tick all the boxes. Do you have income at this rate? Do you have income at this rate? Did you use any annual allowances? Are you deferring? Is there any unrelieved losses? All of that, that's all manually entered. And if we could do some sort of making tax digital, maybe we wouldn't have to manually enter so much stuff.
That's it. Amy, Suzannah. So Tim's a lovely person. If I had to share some clients and had some clients I need to pass over, I wouldn't mind passing them to Tim. But if Tim's not scared to come over here and start working with MTD, doesn't that kind of make us think that actually our biggest threat from an accountant's point of view could possibly be other accounting firms outside the UK going, well, all these UK accountants are just moaning and struggling and they're, they're causing issues and everything else. Should we be worried that people from outside the UK are just going to swoop in and offer a solution that we can't even, help our clients with? Yeah.
Because,
go on, Tim.
No, I was just going to say very quickly, because Aaron's exactly right, because if you come in as a new entrant, and that's whether you're coming from overseas or whether you're newly qualified, right? You don't care what was going on 5 years ago, you care what's happening now, right? So MTD's happening now. So imagine not necessarily right now, but in 2 years' time, someone who's just entering the market, MTD is just the way. They're not going to care that 5 years ago, I know we all love to chat on LinkedIn about, wasn't it wonderful when we had fax machines and franking machines and rubber stamps and we sent post and all that, but we don't actually want to go back to that. We don't care about it. No. It's just reminiscing, right? We actually we deal with everything as it is now.
100%.
It's like I said, it's the forward thinking practices are going to be fine, and you see on LinkedIn, or not so much on LinkedIn, but you see it sometimes on, I don't know, accounting web, in the comments, people saying, well, I'm closing my practice because of this. But these are that much older generation who are probably near or over retirement age anyway, but forward thinking practices who are already embracing all the different changes in technology are not really going to be frightened by this. So I don't think we're at threat, particularly from overseas. There's but there's going to be a lot more people in the market potentially for a bookkeeper or an accountant, so maybe there's room for competition.
I definitely think there is more room, because I am talking to people, accountants, that are not necessarily in the older retirement bit, that just cannot be bothered to do another thing like this. And this, for sole traders, then it's not, for some of them, it's not their bread and butter. The traditional accountancy practices that have limited companies and do a lot more, they're once a year sole traders that come in with a box. They're quite happy for them to do that. Now they've got to change it and actually make a bit more, do a bit more for these people that they're not necessarily going to be able to charge more for. Well, I know we're talking about pricing another time. They're like, nah, I can't be bothered. So there is quite a range of age ranges of accountants and people that have been there in the space a short period of time and a long period of time that are like, this isn't for me. I'm going for the limited companies, the bigger ones, and I'm going to start doing that. You feel free. So I am getting some clients that are contacting me that are like, my accountant's retiring, or my accountant hasn't told me about MTD at all. I think it would be good to have more people in this space, because I think as we get closer, and even when we're in that first quarter, there are still accountants and bookkeepers that don't know about it, because they don't go on LinkedIn, they don't do their CPD, they don't follow any of the channels. Unless you're having a letter through the post, which I know we've spoken about before, they are few and far between. Not all of my clients that I know are going to be mandated and has had them. So there are still accountants and bookkeepers. Hence why we're doing this series. There are people out there that don't know, that are not going to tell their clients. And I've spoken to a few of them. So actually, more people getting into this space, I think, is going to be essential to help those that are going to get to July and be like, what is this? What do I need to do? And we'll have the plans in place to help them with it.
But also, those accountants that I can't be bothered to do more, if they don't want to necessarily lose that business, but they don't want to do more for them, why are they not partnering with their friendly local ICB bookkeeper, right? Exactly. Because here's the thing, it's not actually necessarily going to cost, they're not necessarily going to need to charge the client more, because if you had a bookkeeper doing the monthly work and the quarterly work, then isn't your job technically as a year-end only accountant easier in theory, right? I know there are exceptions to that rule, but if you've had a bookkeeper doing all of the bookkeeping throughout the year, liaising with you on any queries, that means it's quick because you speak the same language, you're not having to translate into plain English for the client, right? Does that mean that, yeah, you don't want to reduce your fee, right? And then the client is also having to pay a bookkeeper, which is bad news for the client, or they're having to learn to do it themselves, which is bad news for the client. But isn't it good news for both bookkeepers and accountants?
Yeah.
Do they have to lose those clients, or can they say, okay, actually, this block of clients, they're the shoebox clients. I'm going to partner with 3 different ICB qualified bookkeepers, one that's a specialist in this trade, one in this trade, one in this trade, and I'm going to refer my clients down to them. I'm going to say, sorry, you either need to employ a bookkeeper, learn how to do it yourself, or then I'll disengage you and you have to find another accountant. I bet most of those clients will sign up with one of the bookkeepers.
Yeah.
And I think it's just down to they can't be bothered to deal with it at all. I think with some of the accountants and bookkeepers, they're thinking it's a mini VAT return, not VAT return, sorry, mini tax return every quarter, that they're going to have to go in and they're going to have to do the adjustment and effect. And we know it's not. No. We know it's not, and they've just gone, no. Or how about you go limited and then we don't have to deal with it?
Yeah. 100%.
What's your opinion of that, Tim?
I don't understand why anyone is a sole trader. I honestly, unless the very specific amount of money you're making means that it is very, very tax efficient to be a sole trader, why is anyone a sole trader? What happens when you get sued and you lose and your insurance doesn't cover it and they take your house, right? What does it cost to incorporate a limited company in the UK? 50 quid and 38 quid a year for the annual, what's the CSO one?
But it's gone up massively.
Oh, it's gone up massively. Boo-hoo. It's £1,000 minimum in Guernsey, and yet we tell people to incorporate not because of the tax position, right, but because of the other benefits of being a limited liability company. What benefit is there to being a sole trader in that scenario, unless you are going to save a substantial amount in tax because of the very specific amount of money that you earn or the specific industry that you're in? Then yes, perfect, fully understand it. I know there are some benefits for single CIS contractors, for example, right? But outside of those scenarios, why are we even having this conversation? We go, oh, you should incorporate, you should disincorporate, you should do this, you should do that. The default should be limit your liability as much as you possibly can. And the default way of doing that is by incorporating a limited company. This is one of the places where, bizarrely, the US has a bit of an edge with the number of different structures you can have, because there are ways of limiting your liability without forming a full company without the requirements that brings. So there's things like a sole proprietorship, where you get effectively, you are a limited company, but you're a sole trader. You can't employ anyone else, but it reduces the amount of filing and paperwork you have to do, right? There was an initiative in the EU a few years ago. I can't quite remember whether it went ahead or not, but it was for micro entities, and it was the idea that you're just going to be a brickie and you work on your own and you're never going to employ anyone and you're just going to be a subcontractor, but you want to be able to limit your liability by creating a separate entity. That entity would be like, €20 and no annual fees, right? And that's the sort of that's why I get I'm so surprised that so many people aren't just going, oh, I really, really don't want to do MTD for income tax. I'll just set up a limited company. Because for the vast majority of clients, setting up a limited company is not actually going to have any material impact on their finances.
Unless ACSP is causing them issues. But that's a debate.
Then they need to find a different ACSP that isn't going to cause them an issue. That's something else I think everyone's making a fuss over. Oh no, you've got to verify the ID of someone before they can open a limited company. Shock horror. In 2025, we want to verify that people aren't made up. Come on. Like, there's going to be high street CSPs who will verify your ID for £5 behind the, like, around the back alley behind the barbershop or something. So why are you worried about it? In Guernsey, if you want to be able to incorporate companies and be a CSP, you have to be regulated by the GFSC. You have capital requirements. You've got to keep at least 25 grand in the bank that you can't touch all the time. All sorts of other regulations, just to be able to incorporate companies. And everyone's worried that we might have to do a little tick box exercise with Companies House to be able to verify ID. Come on.
I mean, I must admit, I got to agree with Tim because I was doing some last night for a client, the verifying ID and going through and doing it. It is so easy, and I've given clients the option.
And bookkeepers if we didn't get a chance to moan about this sort of stuff, right?
Well, yeah, there is that.
Yeah,
And
I
speaking
do
of
like a
moaning,
moan.
nice segue. Let's go to our Q&A section because we had 2 nice questions come in from Paul. I promise Paul wasn't moaning. He says the MTD requirement will be cash basis first with an option to switch to accrual. Thanks for clarifying that one, Paul. On the idea of paying tax quarterly, the biggest issue is MTD does not support other income sources. Therefore, using the free line reporting through MTD could only be used as an estimate. My thoughts is that HMRC will use this to send clients estimated tax calculations and at the most maybe introduce HMRC pots to help businesses save for tax. I mean, the really cynical reply to that, in my opinion, is why aren't we putting all of income onto MTD going forward? Like, why? I don't want to say this out loud. I don't want this to ever happen, but why isn't dividends declared on RTI?
Yeah.
Like, why are we, and back to what Tim was saying at the beginning, right? Like, why are we making all these concessions and making it, making it easy and having all these different confusing, in or out and all that sort of stuff? Why don't we just make it straightforward and everyone's into MTD and going for that? But what's everyone else's opinion on that one? Do you think we can see a world where payments are coming forward? Because I still feel like that's the carrot on the stick to encourage people to actually embrace MTD, right? Like if people can pay quarterly, I think a lot of people would actually quite like that, right?
I think people would be able to see. Oh, sorry.
No, go on, Tim.
I was going to say, I think if people could see, like the digital tax account login thing that everyone can do.
Yeah.
Imagine a world where you've got a job and a side hustle and your own business and 3 other sources of income and a rental property and God knows what else, and you've had some dividends. Imagine a world where everything gets reported as it's incurred, and then you log into the tax account, your online personal tax account, and you see on the left-hand side, right, here's your tax for this month. You earned this from your PAYE job, and we deducted this much tax, and then you got paid these dividends, so you owe us 5k for that, and then you got a refund on this, so we gave you back 4k, and then you had some self-employed income, and the tax estimate on that is 900 quid. So currently your balance is you owe HMRC 1100 quid. Do you want to pay it now? Do you want to pay it quarterly? Do you want to pay it monthly?
That would be brilliant. Yeah.
Right.
But you don't have to.
That isn't actually that hard to achieve.
No.
But the problem is that they're trying to shoehorn new things into existing systems. Whereas if you look back, and I know it didn't go perfectly, and I know someone will get in the comments eventually and say I'm talking nonsense, but if you look back to, I think it's 2010, when Australia changed their federal tax system and they introduced GST and they changed a load of how the income tax works and everything, they simplified everything massively and they made it so simple. And then if you look at some of the Nordic countries, although it still comes, by an email, although it's only annual and it's not ongoing, what I just described there is exactly what they have. They show you what they think it is, you tell them if they're wrong, and then you pay the difference. And that's really what we should be doing.
And that would be the carrot on the stick to make all this make sense.
And then everyone would be like, okay, yeah, cool, I can get on board with that.
Just like
the guy. Because then there's no more payments on account. There's no more paying in advance for a liability you might not have. Because I understand one of the issues of MTD is, God, what if I did absolutely smashing the last 5 years and now I'm having a terrible year and I can't afford it, right? And it's all very well us saying, why are all our clients not putting money aside for tax? We're all human, right? Human beings often don't do the most sensible thing. We've all had that situation, I'm sure, where you've been a really good boy or girl and put all your money aside for your tax, but then the boiler exploded and you just borrowed 1,500 quid from the VAT pot to sort that out because you've got another 2.5 months to make that money back and replace it, and then you didn't replace it because you had a bad month, right? We've all seen in that situation many, many times and hopefully helped them resolve it, okay? But if you had the option to actually deal with it there and then monthly and not have those overhangs from previous years, then everyone might be on board with it.
Agreed. Paul had one more question then before we wrap up. We currently only offer 3 levels of support, says Paul. Personal tax, advanced tax, which to him is VAT, PAYE, and for employees, etc. And digital support. Those with digital support, will you monitor their software use? What sort of support are you guys offering to clients? And what price point would you put on this once MTD goes live. Or you simply suggest they get a bookkeeper. On the price point, we'll talk about that in a separate price point episode. I know we keep teasing this, but we'll leave the price point till then. Team, what would your recommendation be for this? I mean, as we've got two very prominent ICB members, I wonder what their response would be. Go for it.
Do you want to go first, Tim, or shall I?
Well, we're going to say the same thing, so you crack on.
So I guess for my sole traders, depending on their size and the volume of transactions, I offer either monthly bookkeeping, weekly if they're really busy, or fortnightly even, and then quarterly as well. And I also offer a quarterly checking service if they want to do their own bookkeeping, but they want it sense checked, and so that's going to tie in really nicely with MTD. But it also helps me that, because I'm not getting to year end and doing the tax return and having to check a whole, I've already done all the checking, so I know what's going on. And and it's like one of the other benefits that we always try and sell of regular bookkeeping. We spot issues and we spot opportunities, and we're in a good position then to communicate with the client about things like that. So
yeah,
that's where I'm at with mine.
Love it. Tim, anything to add?
I think all the bookkeepers and accountants need to pay attention to the fact that what Suzannah just described, where someone's doing their own bookkeeping and you're checking it monthly or quarterly, that's actually a really good way of making sure that someone's compliant from the start. Because clients like that are generally the really small or really new, who are definitely in the mindset of, oh God, I can't afford an accountant or a bookkeeper just yet. Like, I know I want one or need one in the future, but I can't afford it. We've got a few clients like that. That's a really good like intro to your services, and that's a really good long-term sales pipeline, because all of those clients that you look after, and they, maybe they're paying you, 50 or 100 quid a month, or maybe they're paying you, if you charge hourly, maybe they're paying you for 2 hours work once a quarter or whatever, right? They're the ones that they're actually really going to value your service massively as they grow. Okay, assuming that they're growing. We always assume everyone wants to grow, not everyone does. Yeah. But let's assume that they are for a minute. They're the ones that you're going to convert to full clients later. Okay, and they're the ones who for MTD is just not going to be a problem at all, because you are going to check their work before the end of the quarter.
Definitely.
And it's a security blanket for them as well. They've got that reassurance that they're doing everything right. There aren't any major glaring issues, and it gives them.
And they can call you mid-quarter and go, this thing has happened. I know I'm not really paying you for this, but can you help me? And you can then either be really nice and say, look, do you know what? Yeah, that's only going to take me 5 minutes. Here's what you do. Or you can say, oh my God, you have got yourself in a pickle. Yeah. I can help sort this out for you, but obviously, that is a bit of an extra charge. I'm really sorry. And they'll go, no, it's no problem. Like, I'm the one that made this mess. There's all sorts of benefits to that, because they're already engaged as a client. You already know their business, and they don't have to sit and explain for 5 hours the last 2 years' history in order to describe what the problem is. When they know they need someone to help, they know that you can already help.
Exactly.
Amy, anything you want to add to that one?
Just coming from I'm in a more of an annual cycle with most of my sole traders, and I'm just giving them the option. Do you want to do the quarterly bit, or do you want me to do the quarterly bit? Yes, I've listened to Suzannah on a podcast before, and we've spoken about this quarterly check-in. So if you do it, I will check it and do the submission for you. It will be this. I have a couple that don't want me to be involved at all throughout the year. That's cool. They're more of the landlords. That's cool.
As long as you're charging them for putting it right at year end if there are issues.
Oh yes, I will be. There, I've already got that little disclaimer that says if you don't do this, it will be, and it will obviously be more, because you're getting me rather than one of my bookkeepers to do it. So I'm giving them the choice, but I think there will be some that won't want me to get involved at all. Cool, but yeah, you're right. If at the end of the year it's not right, and we're gonna have to go back and do the whole year, I'm gonna have to charge you for it.
Yeah,
definitely. Well, thank you for putting that question in there, Paul. Remember, if you've got any questions, then use the little link down below. Give us your feedback, give your questions, and we'll make sure we cover them on the next show. Tim, thank you so much for coming along and talking on our silly little podcast all about the world of MTD Watch Series. definitely insightful to see from an outsider. Why are we all bothered? Why have we even got a podcast in the first place?
Yeah, this podcast should be the shortest podcast in the world. It should be like, you guys got all your clients ready for MTD? Yeah, I have. Yeah, cool. See you later.
One episode, it's done.
Yeah, well, no, you still do an episode every week, but you just get that out of the way first, and then you discuss the mystery of like how all of Aaron's dry clothes got wet, which is the story for another time.
We've got a whole series coming out of cool locations at this place. There's a lot of question marks that need to be answered. Put it that way. We've had an interesting one, so keep an eye out for that one. But thank you, Tim. Thank you for coming along. Thanks very much
for coming to see us in person. We've never been a guest on something where I haven't sat in a room on my own before. So
was a pleasure. Anything you'd like to plug, Tim, your end?
Yes. If you have clients in hospitality and retail that you just can't, and you've just had enough hospitality and retail.
Yeah,
you're not the only one. Let us know. Let's see how we can work together on something we've got coming up. And we are TCS going to be in the UK a few times over the next few months. So if you haven't already met us, even though I guarantee absolutely everyone currently watching this podcast has, that we've people that listen to us later. We're really nice. Come and say hi, and we'll tell you about how great Guernsey is, and you can tell us about how much you're ready for making tax digital.
Love it. And recent winners, won't you? Do you want to plug your recent PQ award?
Oh, PQ awards, yeah. That was literally only a few months ago, and it feels like so long ago. Yeah. So keep an eye out for us at the next lot of award ceremony where we're up against a load of our friends for the same award. So Lara and Libby, if you're listening to this later, we're coming for you. You'll see us at the Accounting Excellence Awards. You'll see us at the ICB Summit. Don't forget, you can still buy tickets to the ICB Summit if you're a bookkeeper or an accountant that does bookkeeping. Even if you're not an ICB member, it's incredibly valuable. It's a good use of your time. You should come to it, listen to all the talks, meet all the people. Lunch is decent, and it's not in a dungeon this year. So what more could you possibly ask for?
And join us.
Well done.
Join us, the bookkeeper.
Yeah.
Kirsty says, good luck for the Digital Disruptor as well.
Oh yeah, I don't know who nominated us for that. Some
nominations gone live.
Nominations gone live about a week and a half ago.
I'm a judge. I knew that, right? And Meho said, thank you very much.
Thank you, Meho.
Amy, Suzannah, you want to go first? What would you like to plug today?
Oh, my Bean Counter Boss podcast is nearly there. It'll be released pretty soon. And yeah, I did an article for the ACCA this week that I did an announcement with about how I got to where I am. So nice. I've shared the link on my LinkedIn. Go and have a look.
Definitely go and have a look. Susanna?
I'm going to plug our episode for next week. Same time, 12:30 on Wednesday. And we're going to be talking about software, aren't we? Just generally.
Yeah, we're going to basically tee it up for the next big episodes we've got coming where we're going to deep dive into each and every one. So lovely there, Susan. A nice little segue for us. And that's it. That's the end of Making Tax Digital Watch for this particular episode where we got an outsider to come in and tell us all wrong. Again, thank you, Tim. Thank you for coming along.
Thank you very much.
But remember, if you want to come and watch these episodes live, then we go live 12:30, I believe it is, next week. So why not come and watch us live? But if not, then put that feedback in and we will come back from you. So it is a goodbye from me.
Goodbye from me.
Goodbye from me.
And I mean, I would say goodbye in Guernsey French, but then everyone downstairs would bully me for saying it wrong, so I'll just say goodbye.